The stock market is massively down in the last days, weeks, and also the entire month. We have a negative sentiment in the market. Even the fear greed index from CNN was at one certain point down to 16, basically going from 0 to 100% from extreme fear, extreme greed. People are pessimists. People are fearful. The trade wars, the tariff wars are definitely hitting the markets. But we did have a green day on Friday, and we had a good bounce. And the question is the bottom in? Is this a tradable rally, or is a tradable rally actually coming up? And what will happen next? Now, all of these questions we're trying to answer in this episode of Wealth Done, ladies and gentlemen. Welcome to my humble little podcast. I'm also going to go over my entire portfolio in this podcast. I'm still, as we talked about last week, I'm still going over or creating a course. So my videos will be a bit shorter in the upcoming weeks until I'm done with the course. I want to focus most of my time on that, but also on my wealth management process. So let's check out the markets. We are currently at 5,600-ish in the S&P. And also we take a look at the diagrams here. We have a RSI which just on Friday bounced from oversold, going from 27 into that 35 range. Also, the MACD is trying to trigger here a buy signal, meaning that the market, the buyers are coming back and the sellers are leaving markets. So on this moment, the sellers are still leaving, are still more than the buyers. So blue line, red line, or orange line here. And we did have a little bit of a bounce on the S&P on Friday. Now, this could be just a fake out and the market could go down from here. But even though recession is just around the corner, or that's what the experts all agree, and when all experts agree, something else tends to happen. So even if recession is just around the corner, it could still mean that we are going to have a little bounce here, and maybe we're going to go down. But this is where our risk assessment at the end of the episode will come into play. So what we're going to do now is I'm going to go over everything that I bought and I sold and how my portfolio is currently handling this particular market. Just go here after weight. I'm still massively, my first position, my biggest position is in bonds, almost 20%. I'm down 1.29% in, this is equal to the TLT ETF. And this little fellow right here is also pretty much oversold, meaning that buyers can come back to bonds and we could see a bounce in TLT. Normally, I wouldn't expect it too big of a bounce because I don't think that the Federal Reserve will cut the interest rate next, I believe the next week. Just check here real quick. From March the 17th, retail sales building Fed. There we go. Fed interest rate decision will be on Wednesday. We're going to come back to this on our risk assessment. So I'm down on my portfolio, almost 10,000 euros here. I'm still yielding in 2.6%, meaning if I don't do anything, I'm going to get 3,000 euros at the end of the year. Now, my portfolio kind of consists of aggressive stocks, but I'm trying to reduce them in the upcoming weeks. I'm still bullish in the short term, bearish in the medium term, and extreme bullish in the long term. So here I'm holding. I am ASML with 6.77% on my portfolio. I didn't change ASML, but I am looking to add to this position. It's kind of going sideways here, kind of signaling that time will come that ASML will jump again. Because let's be honest here, ASML is the producer of all of the machines that produce chips, is the single and best producer out there. Also, we have AMD, which may have been a big mistake for my part, where I started added back to him. To that position, it's currently at 5.94% on my portfolio, but I'm massively down with 31%. Next up will be Alphabet. And this is actually a position that I'd added to. I'm currently at 5.82% on my portfolio, down 18.29%, but I'm extremely bullish on Alphabet, parent company of Google and also YouTube and also Anthropic. Alphabet, I believe, is the biggest player that will be in AI in the upcoming years. Next up, Hims and Hers. Kind of made a mistake here. Bought it before the earnings call and then everything went to, or added a bit more to it before the earnings call. everything went to waste after that. But I'm still bullish on hims and hers. I'm currently at 4.84% on my portfolio, down 33%. So you must be asking yourself, I'm still up here, not down that much. Next up, I also increased my cash position, and I'm planning to increase it even more. I'm at 4.66% on my portfolio in cash, and I'm going to go to over 30% in the upcoming months if everything goes as planned. Next, we have Procter & Gamble. Added a bit back to Procter & Gamble, waiting for a bounce here. Will massively reduce that Procter & Gamble. I'm at currently 4.64% of my portfolio. Let me just check if this is correct. Yes, it is correct. I wanted to have it at 5% of my portfolio. Well, it actually would be if I would get back to zero. Yeah, that's the plan. Yeah, because I'm negative 1.74% on Procter & Gamble, but this is going to shoot up there, and then I'm going to reduce it to maybe 3% of my portfolio. Next up, Intel. Didn't do anything with it. I'm just waiting to somebody buy Intel. So actually, Intel news, as you saw maybe in the news, that President Trump had held talks with the CEO of TSMC, and they are in talks with Broadcom, with who else? I don't want to make any kind of... So I'm sure with Broadcom, TSMC, and Oracle? No. Nevertheless, I'm going to check out that news later on, because they want to buy or become a majority holder in Intel's foundry business. And if that will happen, I see Intel becoming profitable somewhere in 2 to 3 years. And that's where I'm going to take another decision on Intel. But for now, Intel, I'm holding at 4.54% on my portfolio, down 20.43%. Next up is Novo Nordisk. I actually meant to add back a little bit more to Novo Nordisk. Again, massively oversold here. This was not the year for Novo Nordisk. Starting from June 2024, it just went downhill for Novo Nordisk. But this is an exceptional company. You gotta be honest with yourself. Novo Nordisk and Eli Lilly are the top stocks to buy in the GLP-1 drugs, and also everything that has to do with GLP-1 and insulin medicine. So Novo Nordisk currently at the 4.02% on my portfolio, down 29.83%, and I'm extremely bullish on Novo Nordisk. Next up, GE Vernova, another GE company, mostly focusing on grids. So this is actually an AI play. I'm real bullish on this company. It just triggered a buy signal here. So I'm curious how this will play out, but I'm going to reduce it as soon as I'm going to reach their comfortable level where I make some calculations, and then I'm going to reduce GE Vernova to a small percentage, 1% of my portfolio. Currently, I'm at 3.58%, down 12.62% in my portfolio. So holding 3.58% in the portfolio, but I'm down on the stock price 12.26%. Next up, I added, and also added to GE Vernova. Next stock is Realty Income. Now, this is a pretty interesting stock. If you take a long-term look at Realty Income, we could argue that this is not a stock to holding good and bad times. It's actually good to hold in bad times only. Now, this stock yields a 5.77%, and it also payouts their dividend monthly. So currently holding 3.3% in my portfolio of Realty Income. I'm down only 1.16% and getting those dividend yields each and every month. Now let's move on to next is United Health. I think United Health maybe hit rock bottom here, and they already triggered a buy signal. Now, how long will this buy signal hold? I'm currently curious on their next earnings report, which will come out on April 22nd, 22. Though United Health is, I believe, the major health provider, health insurance company in the United States, I'm pretty much bearish on United Health. I could see United Health having here a major correction, although they did go from $620 to now currently $488. So a major correction then at United Health, over 20%. I'm holding 2.87% in my portfolio and positive just 0.52%. And also looking forward to reduce United Health as soon as maybe before their earnings report, actually. Next up, we're going to talk about Exxon Enterprise. Exxon Enterprise is massively oversold. Triggered here a buy signal. This is a security company. a major producer of tasers. I'm still waiting for them to announce who will be their next major partner. They also broke up their partnership with a network provider. This is one company that I'm really, really bullish on. Just take a look at this surge. Now, even if Axon Enterprise will have a major pullback, I'm planning to add even more to it. But I'm waiting for a jump in the stock price. I'm going to reduce it to 1% of my portfolio holdings. I'm currently at 2.66%, 6%, 2.60%. Sorry about that. And I'm going to reduce it to 1%, and then I'm going to increase it to where I believe this should actually be. I'm going to talk about Exxon Enterprise in a future video, actually. Okay, next up we have Caterpillar. Why? Well, Caterpillar is, although extremely recession sensitive, because without things to build, Caterpillar will go down. But I did see a possibility in this stock for just a bit of a trade possibility here. I'm still down, although I'm holding 2.59%, I'm still down 3.41% from where I bought it. I'm not going to keep this stock. I'm still waiting for this to have a major correction and then maybe taking another look at this stock. Currently it's yielding 1.69% yearly dividend. That's not much, but they do increase the dividend yearly. And it is a really good company. Have really useful products, useful services. So Caterpillar is a good company. Next up, Palantir Technologies. So Palantir is one of those stocks that you got to watch out for. Going through a major correction, Palantir is currently trying to trigger a buy signal. I'm holding in my portfolio 2.54%. This should be actually a 1% holding in my portfolio. When this is going to go, if we're going to have, actually, I'm pretty sure that we are going to have a jump in the stock, in the entire stock market. And then we're going to go through maybe a even bigger correction this year. Now I'm going to reduce it to 1% of my portfolio. And then when I see this company going through its major correction, I'm going to add back to it. It's a long-term holding for me. I don't know if I already said this on my podcast here. I had Palantir at $20 and I sold it, even losing $200 on that trade. So I had it back here. Mistakes were made. Who would have guessed? Okay, this was before the AI, for the AI news. Okay, so that's it. Palantir 2.54% on my portfolio. Now let's move on to Kinder Morgan. Interesting stock because Kinder Morgan is a major pipeline, so it's in the oil and gas industry, but they are providing motion for infrastructure for gas. So yielding a 4.33% dividend yearly, but at current, so don't get fooled by this, because if we zoom out, Kinder Morgan is actually down from its peaks in 2015, down over 50%. Now, this is not going to be a long-term holding for me. I'm going to wait and see what will happen with the trade wars. What will happen with Russia and Ukraine? Because if Russia, the play here is actually that the United States will deliver more gas to everyone, especially the European Union where I'm living in. If that's the case, and actually that is why Kinder Morgan ripped here. If that's the case, it's going to go up even more. If there is a peace treaty between Russia and Ukraine and long-term even, then this is going to fall because there will be talks about Russia resupplying Europe with gas. How much gas? We don't know. Everything is in the stars at this moment. But at that point, Kinder Morgan will no longer be a holding position in my portfolio. I'm currently holding 2.53%. I'm just nibbling at this stock. Let's see what happens. Next up is Rocket Lab. I added a little bit to this on its major pullback. I'm currently still down 28.78% on the stock price from where I bought it. It's currently at 2.53% on my portfolio. Rocket Lab on a long term should be a exceptionally good stock to hold, but could go through a even bigger correction here. So take care with this stock. Next up, I have Diamondback Energy, ticker symbol FANG, with 2.46% on my portfolio. This is actually just a trade for me. If we take a look at their long-term diagram, also, I don't know what to say about the dividend yield because it's, depending on what platform you're looking for, constantly changing. So then not at 5.63%, they're actually more at 2.74% dividend yield yearly, that is. And I'm just waiting here for a major bounce, and I'm going to sell this position completely. Actually, down now 0.73% in my portfolio. Next up, we're going to talk about Markel Group, ticker symbol MKL, which is kind of like a Berkshire Hathaway, but not with the same performance track record. Now, I am at 2.16% on my portfolio currently with Markel Group. At a little bounce here, I'm going to go back to only one share. I'm currently at 2 shares. This stock is trading for $1,847 a share. So I like this kind of stocks. I really like them. Due to the fact that they're not volatile, not that volatile. But if you take a look at the diagram, it almost looks like a volatile stock. But even Procter and Gamble, if you take a look here, Procter and Gamble, if you take a look at their stock chart, it also looks volatile, but they're actually not. They're not that volatile, and they're where we have them. They're pretty stable. Now, the major players actually insurance, so they get their insurance money and they reinvest it in different companies. So it definitely, they don't yield any kind of dividend, but it is a stock to watch for, especially here if they trigger a buy signal, maybe sell into that little rally and then wait for an even better opportunity to get into this stock. I really like it. Okay, let's go to the next position of Constellation Software, one of my favorite stocks. Currently holding only 1.91% in my portfolio, waiting for a major pullback in this stock. And that is where I'm going to go deep into the stock. Problem with this, it's also one of those stocks that never had a split, and they're currently trading for $4,698 per share. So I only have one share. Also down 1.03% in my portfolio. No biggies. Next up, let's move on to Microsoft. 1.82% of my portfolio. Trying to trigger here a buy signal, and that is where I'm going to reduce it to only 1% on my portfolio, or maybe eliminate it completely. I love Microsoft. I'm using it right now. I'm using Windows right now, but I still believe that Microsoft right here is far too expensive to buy. I'm looking for a much better buying price, and I think we will get it. The current PE of 30 is just too high for me. Although this is most people say this is a growth stock, but if you take a look at Microsoft, and they yielded over the last 5 years 163%. And if I take a look at Berkshire Hathaway, even the B stock, which yielded 174%, I would go with Berkshire Hathaway. I would just go with Berkshire Hathaway. So no, I don't think that Microsoft is a buy at this particular price. Now let's move on to the next position, Nvidia, 1.78% on my portfolio. Now this is a growth stock. And with this PE of 39, if this gets down to 30, that is a good PE for this stock. This is maybe even if, sorry about that, even if this will bounce all around the place for the next couple of years, have a rally, come back, have a rally, come back, Nvidia will remain a major player in the AI business and all the chip business. And they did start yielding a bit of a dividend. If it is only 0.03%, which is, well, just saying we're here and we plan on increasing this dividend, this could turn into a major dividend, not a major dividend, but a good dividend company, basically increasing the dividend yearly. Also looking for a good bounce, and I'm going to reduce Nvidia to 1% on my portfolio. Next up is Brookfield Corporation. Had a major correction here. Good correction. Okay, don't look at their PE. This is bonkers. Brookfield is a complicated company. Should you buy into complicated companies? No. But if you dig it a bit deeper, it's actually a pretty simple company. We can understand where they make their money by investing in companies that are not listed on the stock market, having major stake in energy companies, in infrastructure companies, in AI companies, in nuclear companies, energy, nuclear, but still nuclear energy. So even in green energy, and also in asset management, because this is Brookfield Corporation, ticker symbol BN, but there's also BAM, ticker symbol BAM, this is the Brookfield Asset Management Company, so BAM, and Brookfield owns 70% of BAM, which is just money management, and they're having exceptional returns. Okay, let's go to NL Capital Management. Also, if you think that this little fella just popped, let's just take a look at 5 years. down almost 60%, and all-time highs down a lot. So from $84 a share, they're currently at $21 a share, but they yielded 12.96% dividend, maintaining it over almost each and every recession. So pretty big dividend payer here, and they just went for a sell signal. Maybe they're going to trigger here a buy signal where I'm just going to hold it. If they have a major sell-off, then I'm going to buy even more annual capital management. I like to build up a little bit of cash return here due to the fact that our cash current return is only 2 points. So the cash that I'm holding in my brokerage accounts, multiples, always spread them out, is because I literally don't pay anything for those accounts. Only when I make some kind of trade, is due to the fact that the ECB cut interest rate to 2.5, and that's what I'm getting on my cash. So not a lot, and they're going to go even lower. That's going to reach to the end of this year probably 2%. So I'm looking for better places to hold my not cash, but have more return on my capital invested. Okay, then we have Dell, a major pullback here for Dell. I don't know where this will go. I hope, truly hope that it has been a disappointment. It has been not only a disappointment for the stockholder, but a personal disappointment for me for making this decision. It was clear in the skies that Dell will not be the best or the biggest player in the server industry, because that's basically what they do. They do sell laptops, but let's be honest, they also sell workstations. So computers built for specific tasks like major rendering companies, or even those of you for work in, let's say, construction companies, or plan major projects in Autodesk software, so AutoCAD or Robot. Or they do build together good performing PCs for specific tasks. So if it's a work machine, you will not be able to game on it. You would be able to game on it, but not like on a gaming machine, let's just say. They just work differently. Okay, Berkshire Hathaway, next stock that I own, and this is a DCA for me, so dollar cost average into Berkshire Hathaway. They had a bit of a sell. Seen that here, they triggered it back because, hey, Berkshire Hathaway. I'm still wondering when the time comes for the switch from the current CEO, which will be missed dearly, Warren Buffett, and what will happen after that. I don't think that. I just hope for the sake of investments that it will have a major pullback that day, and that the stock will rebound. Although that will be I think the biggest loss for the investment industry in all time will be the death of Berkshire Hathaway's CEO Warren Buffett. But no one lives forever. Okay, moving on. Another stock that I bought in last couple of days is Main Street Capital, a capital investment company. Of course, they're having here a major sell-off, and I said to myself, why not a 5.33% dividend yielding company? If I get that dividend, okay. If not, the signs are clear here in Main Street Capital Management that they will have a major pullback if a recession hits. So I'm kind of seeing here a whip and then a whip down, and I'm going to sell into this and buy into this. Nevertheless, they are a good company. Okay, next up, let's move to Constellation Brands. I reduced my position in Constellation Brands to only 0.66% of my portfolio. Looking forward, 0.64% of my portfolio. Looking forward to add back to this later on. And we're going to close up here. So next position that I massively reduced is AbbVie. Looking to add a lot to AbbVie, because AbbVie had one of its best runs, I think, of all times. Maybe this was even better. This will have a major pullback. When is the question? I don't know. And AbbVie is a exceptional company, and I am looking forward to add back to it. Also, they yield a 3.1% dividend yearly, so AbbVie is going to get the thumbs up from me. Next, I massively reduced my Eli Lilly position just before the correction. Yay! And I'm at 0.48%, so nothing in my portfolio. Looking to add back to it. And that's basically all. Leo Lithium is still a dead fish in the water because it's blocked after their dispute in Congo, I believe. So it's no longer tradable, but the position is blocked in my portfolio. I'm going to do a video on risk assessment, risk management for stuff like this. It was actually part of it as a trade. It went sideways and I didn't lose that much money. So I'm currently down 46% in the portfolio, but it's only a 0.12% holding. So not that big of a deal. That is risk management. Risk assessment is where I went wrong. Risk management is where I went right. Okay, let's do a risk assessment for the markets for the next month. So what do we have here? The next week, the week ahead, we have retail sales on Monday, so major economic events. Then building permits on Tuesday and housing starts. And then we have I have a sore throat. Let me just get a sip of coffee here. Coffee break. Love coffee. Love coffee. Then on Wednesday, we have Fed Chair Powell coming out with whatever the Federal Reserve decides to make, FOMC meeting and the press conference of Fed Chair Powell. And then on Tuesday, we have existing home sales. And on Friday, we have nothing. So let's see how the market holds up for next week, because this will be a potential risk for me. So economic news do pose a high risk in the market. Now, if we take a look at the S&P, let me zoom up here a bit. Go to S-mini right here. The future markets for the S&P, we had a major sell-off. On Friday, we had a bounce. So the S&P is S&P 500 oversold, which constitutes a low risk in the market. The MACD is on a sell to buy signal. So it's trying to trigger a buy, which I would say is a low risk in the market. The RSI just came back from its oversold position, so low risk in the market. Overall sentiment is let's just take a look here. Overall sentiment, the fear greed index is at 21. So fear and greed, 21, which is a lower risk in the market. And we have the Trump, what should we call it? The Trump Trump post effect, which is a very high risk in the market. So there we go. Back to 45% risk in the market, in my humble opinion. Now, why is that? It's because all of these economic events, so all of these positive signs that we should get rarely, will, at the end of the day, be acknowledged by Trump. Anything could happen. Without Trump, if this was Biden, I would say we're going to have a very good week next week. But due to the fact that the Trump effect is there, nobody knows. But overall, maybe the risk is less next week than in the previous week in the markets. So with this being said, thanks so much for watching. Like, subscribe. Catch you next time right here on this channel. I'm Bien. Wishing you a lovely day. Stay safe out there. Bye-bye.